Today is June 29th, 2025. Call it a neutral trend poised for volatility spike structure off a symmetrical triangle with dual Fibonacci convergence zones, where Tesla here is locked in a coiling range where buyers and sellers are squeezing toward an apex defined with this ascending uptrend price support level off the April 2025 lows in confluence of a descending resistance level from the 2024 December top, where this symmetrical triangle structure suggests that a breakout is near, likely within the next 1 to 2 weeks, where the current price hovers around the 382 fib retracement level, acting as a pivot magnet, where the apex also lies a near psychological number zone around the 325 330 range, making this a high stakes battle zone. You have a nice clean divergent high. You have negative and bearish divergences constructed on multiple key technical momentum indicators, only increasing the odds of bearish momentum, where the RSI is likely compressing between the 45 and 55 handle, showing complete indecision here, where you have the MACD likely converging, no dominant force yet, only flatlining above its zero line threshold, where volume could be declining, typical of some of these triangular structures. So therefore you have muted momentum that is coiling energy, waiting for a breakout confirmation. You do have the stochastics in a bearish crossover steaming to the downside off its 1033 customization. Overall, this is a neutral zone, bar none. Tesla is coiled in a high energy neutral triangle compressing just above that fib confluence zone, where the next $30 plus move could be fast and directional, triggered by a break of either uptrend price support and or descending price resistance level, where I get sort of this classic head and shoulder top fill. Off that first major reactionary high rejection, I will be looking for short sellers will be looking for a break of the 314.96 level. Watch for an additional solid infused daily candle close below, only validating the structure and strength of the right shoulder of the head and shoulder classic looking bearish momentum pattern. And that will fuel in some shorts to begin piling in, setting some stops above that 382 and the 328 price resistance level for a more aggressive trend to capitalize in on starting a position starter short, and then ultimately adding with an additional solidified breakdown, red infused candle close, trend break off the ascending uptrend price support level would only usher in a solidified breakdown confirmed sell signal, only increasing the odds for potential backtest and a revisit of the 236 fib support level, which will be a huge psychological level to call it 286.05 handle. And that will be the first target for any long traders and or bull traders to defend heavily if and when short sellers take that level out with conviction. That would only fuel a much larger move down to the T2 target at the 260 handle, which would be solidified and good for a, call it a 17% crash to the downside. And if things get really exceedingly damaged within those key indicators, would only strengthen a move on the odds to the 223 handle on a revisit of those major reactionary lows for a 30% crash to the downside, or a surprise drop in the Q2 delivery numbers could signal demand exhaustion despite some of these price cuts that they initiated. And then you layer in a hawkish Fed or rising bond yields, and the high valuation tech trade could unravel fast, with Tesla ultimately leading the drop if it snaps its neckline. Long traders, bull traders, they want to see a solidified breakout candle above the 356.41 handle in confluence of its descending price resistance level to usher in any strength in short covering and short sellers to begin to panic as long traders infused the breakout of a neckline short head and shoulder squeeze to the upside, ultimately targeting the 618 387.85 handle, and then ultimately to the top of the 7864.32 handle if things were to get extremely bullish. Structure still favors bulls if they reclaim the 356 handle. Then you have clean upside ladder via the fib confluence. Additionally, setting some stops below that triangle support, call it near the 314 handle, once again where short sellers will pile in. That's what I believe the algos and short covering some of the margin calls to go off, but bulls must defend that level if we initiate. Bulls, long traders will wait patiently for the breakout before taking a position. Taking a position here, again, once again, in this neutral stance would only remain aggressive, but can be done in confluence of dollar cost averaging the bottom of this upper ascending trendline price support level. But if I were long, I would wait for an additional breakout above that key inflection point, ultimately to usher in an explosive rally to the upside, ultimately challenging these negative and bearish divergences that were ultimately formed from the beginning to only be burned out by long traders and long-term investors to infuse an additional, much larger rally to the upside.